Hello everyone, Gerard here with another lesson on taxation. In this video, I'm going to be talking about entertainment, amusement, and recreation expense as a tax deduction. For the purposes of this video, entertainment, amusement, and recreation expense shall be termed as EAR. I also included timestamps right here so that you can easily navigate through the video. So let's begin. Now, one of the expenses that can be claimed as part of itemized deduction of the taxpayer is entertainment, amusement, and recreation expense. This includes also representation expense, depreciation, and rental expense related to entertainment facilities and are subject to limitations. Now, if you look at Section 34 of the Tax Code as amended, there is no specific mention for sealing of EAR. That is why we have Revenue Regulation 10-2002. Section 34A of the Tax Code as amended talks about expenses that can be deducted from gross income, wherein it could be a reasonable allowance for entertainment, amusement, and recreation expense during the taxable year that are directly connected to the development, management, and operation of trade, business, or profession of the taxpayer, or that are directly related to or in furtherance of the conduct of its trade, business, or exercise of profession. This type of expense is allowed for taxpayers who has direct relations to prospective clients or customers. Conversely, if this expense is incurred for employees, directors, stockholders, partners, or trustees, it may not be considered as EAR. As mentioned a while ago, EAR may include representation expense, depreciation or rental expense in relation to entertainment facilities. These facilities may include condominium, a vacation house, a yacht, a private plane, or any other property, real or personal, that is primarily used for guests. Now take note, to be considered as entertainment facility, it should be owned by the taxpayer and is being used for trade or business, or is being leased wherein the taxpayer claims depreciation or rental expense. So the following can claim EAR. First is individuals engaged in trade or business or practice of profession. Next is domestic corporations. And then we have resident foreign corporations. Lastly, general professional partnership, including its members. Take note also, fringe benefits and compensation expense in the guise of an employer-employee relationship is not considered as EAR. In addition, promotional events such as concerts, conferences, webinars, or seminars, and other similar activities are not also considered as EAR. Now, the next question is, how do we claim EAR? First is, it should be incurred or paid during the taxable year. Second, it is directly connected to the development, management, and operation of trade, business, or profession of the taxpayer. Next is, it is directly related to or in furtherance of the conduct of his trade, business, or exercise of a profession. Fourth is, must not be contrary to law, morals, good customs, public policy, or public order. Next is, it should be substantiated with sufficient evidence such as official receipts or other adequate records with regards to amounts being claimed as expense and connection to development, management, operations, and/or conduct of the trade, business, or profession. Next is, the expense should not be considered as bribes, kickbacks, and other similar payments under Section 34 of the Tax Code as amended. And then lastly, any applicable withholding tax has been withheld and remitted to the BIR. Now, with regards to sealing, for seller of goods, it shall be 0.5% of net sales, whereas for seller of services, it shall be 1% of net revenues. For entities with both sale of goods and services, we need to apportion the EAR. We can use this formula right here for the apportionment. So let's go to our illustrative problem to demonstrate this. In our first illustration, the taxpayer is a seller of goods, so the applicable rate is 0.5%. The allowable deduction shall be whichever is lower between the actual EAR and the ceiling. In computing the ceiling, the actual sales is 200,000 multiplied to 0.5%. Therefore, the limit is 1,000. This amount will be used as it is lower compared to the actual EAR of 2,000. In our next illustration, the taxpayer is a seller of services. So the applicable rate to compute the ceiling is 1%. Comparing the limit with the actual expense, the amount to claim as allowable deduction shall be 2,500, which is the lower amount. For the last illustration, the taxpayer sells goods and services. Therefore, we need to apportion the year, such as what I did here. For the sale of goods and services, the apportionment is 2,000 and 4,000 respectively. This shall be compared to the computed ceiling using the rates I mentioned. Therefore, the answer shall be the total amount of 2,500. You can learn more about this topic with Revenue Regulation 10-2002. And if you're interested with other videos related to expenses that can be deducted from gross income, I will link them in the description below. And that's it. So as always, a huge thanks for watching. If you found this video very helpful, give it a thumbs up and make sure to subscribe and hit that notification bell because it helps me create more videos like this. So this is Gerard. Have a great day.